JJ, it's good to have you with us here this morning. Good morning. You know, it's been a weird week, to say the least, right? We're seeing an incredible week, the best for the Dow since the 30s, but also the worst month since the financial crisis. So square it up. Are we out of the woods? Are we not out of the woods? If you're an investor waking up this morning, should you be relieved or should you be scared?
I think you should be relieved in one sense, Courtney, and that is if you think about the last few days, yesterday and today so far, we haven't hit the limits and the overnight trading. And so in order for us to really start to go higher, what you need to see is more predictable trading throughout the day. So that is, at some point, it would be great for me to come out with you and say, here's where I see as support right now, here's where I see as resistance as we trade throughout the day in the S&P 500. I don't think anybody can truly say that with any confidence right now because the moves are just so big. So if we just start to get a little bit smaller trading range over the next few days, and as we head into next week, if we can narrow that trading range, so right now it seems like every night we're trading 100 S&P 500 points overnight. If you start to narrow that to 80 and then 50, and so something that's much more predictable and much more in the ranges that we're used to, I think that's the very, very first step we need, because it was great that we had these 3 days up, and I think it helped the market with confidence quite a bit. But again, the size of these moves, where the Dow's moving over 1,000 points a night, long term isn't healthy for the market and makes it very, very difficult on the average person to go in and do things with any certainty.
Yeah, a couple good points there. You're right. We're not at limit up or limit down, at least. But where futures have started out the morning indicating the market will go has not always held throughout the trading day. Case in point, yesterday. And speaking of yesterday, we got those jobless claims numbers of 3.28 million, far and above the last record high for that metric. Now, we knew they were going to be bad. Maybe for some, they were actually worse than others. But at the end of the day, we still rallied 6.4% on the Dow. So what do you make of that? Should we just expect these numbers to be worse than expected and it's not going to dictate market direction?
Well, I think yesterday really came down to, so first of all, Courtney, 100% you're correct. I think that was a surprise to many people. Just over 2 million was the high end most of us were hearing going into that number. So when we came to 3.2 million, when the number first came out, the market really didn't know what to do with it. We kind of went back and forth. As you said, the rally started, and it was absolutely amazing throughout the rest of the day. That all said, it kind of came down to job numbers versus expectations of what can happen to a good side with the bill passing the Senate, et cetera. Now, I do think numbers are still going to continue to be worse. And in fact, when we get the employment number here coming out in a couple of weeks, that's really going to be a huge test. And I think that after yesterday's numbers, everyone's even lowering their expectations further. I think retail sales is going to be really, really interesting when that number comes out. Because the one thing that I think that people are looking forward to when we finally get over this hump, again, the stock market being a forward-looking vehicle, is all the pent-up demand. People are dying to get outside. Here you showed Chicago as I came in. Here in Chicago, they banned us from the beaches yesterday because people have a pent-up demand to get out. So I do think the positive side of this will be when we start and all stores are open, you may see a surge initially in things. That said, it looks to be 2 to 5 weeks away, depending on which estimate you're going to go with from doctors, et cetera.
Right.
So until then, can the market hold its ground? And I think that's the most difficult thing is for us, as I said, to churn inside a range.
We have just about 30 seconds left or so, JJ, but while business is largely closed, earnings are still coming out. We got some numbers from Micron yesterday. Just quickly, when you look into the numbers, does it give you a broader indication of what might be going on in the tech market or any other read-throughs there before we let you go?
Well, really quick, the one thing I will say is chips so far have looked like they may do okay. The stocks have done well. We've had some good news there, and they held up much better than anybody expected in 19. Hopefully they can do throughout this crisis, and I think those with really good balance sheets will actually come through pretty well because they tend to do business with companies with really good balance sheets, and it's infrastructure, so people will have that demand.